Hey everyone, the Motivational Professor here, and we are ready to break down crude oil analysis again for the next few days. I hope all of you had the opportunity to take advantage of this super nice sell area that we gave out in our members area. And again, just a nice way, whether you wanted to scalp the market for 10, 30 points or go further, we capitalize over 100 points on that move right there. So in this video, we're going to break down, we're actually going to start with the monthly view. I'm going to show you some things that you should be looking at the weekly, the daily. We're going to go all the way down into where we enter our trades on the 5 or 15-minute time zones. And if you stay until the very end of this video, I'm going to give you a bonus trade setup that I found getting ready to pop. So without further ado, let's jump into our analysis. Okay, so we are starting at the monthly time frame, and I think a lot of traders don't spend time on this monthly. So I wanted to show you how, as we look at the monthly, we can begin to see previous areas of support and resistance. Now, sometimes a trade reverses and we don't know where that area of support or resistance came from. Well, sometimes it comes from the monthly time frame, and that's why it's so important, in my opinion, that we spend a lot of time looking at the higher time frames, starting at the monthly. And in this video, we're going to be working down the weekly because I want to show you some key areas so you are not getting caught on the wrong end of a trade. So let's go ahead and jump right back into the chart here. And so we've established that we've got that monthly area right now that we've already rejected from. And I'm going to show you that on the 1 hour time frame. Okay, I'm going to kind of go back in here, and you can see here by my aqua line that is the initial area that we rejected on Friday. Okay, we went up to about that price point and we rejected. And you may have said, well, why did we reject? Well, on the monthly, that is an area of resistance. Okay, so important to look at. Now what I want to do is I want to go ahead and jump into the weekly time frame, because again, just kind of like the way we saw it before, the weekly is also going to give us that perspective of support and resistance, right? We can see here it acted as support. Here we've got resistance, right? Support and resistance. Here we had to the top side resistance, right? And now here was that area that we just recently rejected on Friday. Okay, so important to kind of look at this and kind of say, okay, if we are going to go higher on a weekly standpoint, we have to be able to close above the area of resistance, which, guess what? We did not. So again, this is why having the ability to do a multi-time frame analysis really sets you up to be more successful, right? If you're only looking at the 5-minute chart, you are going to miss key areas of support and resistance on the smaller time frame. We like to enter on the lower time frame, but we want to do our analysis on the higher time frames. Okay, so now let's go ahead and go back to the chart and take a look at the daily time frame. And again, I like to look at all 3 time frames, and I'm going to go ahead and get rid of this to see if we are getting, the same type of patterns. And we can clearly see this here, that we've got that area right here of resistance. We had kind of a false breakout, acted as support, kind of more traffic. Okay, we had the area bounce off of here, and then we are here now. So as we look at the daily time frame, right, it appears that that area is a strong area of resistance. Now, why is that a clue for us? Because we did not close on the monthly, on the weekly, or on the daily above that strong area of resistance. So based on that one factor and one factor alone, right now, a lot of my opinion is based on we are going to go lower from here because we did not close on any of those time frames, okay, above that area of resistance. So let's get back into the chart now. And again, hopefully this is making sense to you. And what I want you to do is to go down into the comments below and let me know if you think looking at the higher time frames is important. Go ahead and put yes or no, or let me know in the comments if you think that looking at the higher time frames is important when you are doing your trading analysis. That way we can kind of see what everyone thinks about. So now we're going to go ahead and dive back into our charts. And now we begin to construct the week right here, especially early in the week. I'm going to go ahead and close this up right here. And the first thing I want to do is, now that I'm getting ready to construct my visual, I like to have wider areas to look at, okay? Because again, area of support and resistance is never, ever a line. It's an area, okay? It's definitely an area. So now that I'm kind of looking at this right here and I'm making this a little bit larger, I begin to formulate what my plan is going to be for crude oil. Now, again, grabbing a arrow here, we have seen that every time we've come pretty close, okay, to this box, to this area, which I call, again, this whole section here of resistance, we have rejected it. And I think this doji candle right here on the day closing towards the bottom of the candle makes me believe that we are going to drop lower with crude oil, okay, based on the price action. We did not create a new high up here, okay? We did not create a new high. So as you begin to formulate your plan for the day or for the next couple of days, this is why it's so important to spend 10, 15 minutes looking at the higher time frames, because now we are getting ready to break down the 4-hour and the smaller time frames as well on this video. So let's go ahead and jump into there. And again, just as a reminder, I am going to give you a bonus trade opportunity, not on crude oil, on a random Forex pair that I got my alert on Friday. And I believe it's going to be a nice sell opportunity coming up for the week. So stay tuned for that. So let's jump back into our crude oil analysis. So now that we have an area here that we are looking at, what do we begin to develop? Well, let's go ahead and boost this up here and let's drop down to the 4-hour time frame, right? Because again, I want you to see how price reacted on this time frame right here, right? And so if we kind of back up here, we've done kind of, you heard me talk about this before. I'm going to get rid of this for now, and I'm going to grab a quick brush, and we can kind of see this, what we call teacup, right? Price comes back up and comes back to retest the area. We had a small dip, back up, and now the question is, are we going to dip back down into that area? Well, that's what we are going to do for the remainder of this video. We are going to look at these areas and see what is possibly going to happen as we move forward, right? Because we understand we have a very nice area of resistance that we have rejected right now. We would need, let me grab a box, we would need a candle to close all the way up here at 80, let's say 88. And let's make this red. I'm sorry, let's keep that green, right? To really change the trend of this area of resistance, right? If we are going to go any higher, if we are going to see 89, 90 and above, then we need that candle to let us know we're going higher. For now, this is a super, again, let me just show you again. This is a super, super strong area that we have built up here because we have enough evidence to believe that, again, we are going to stay somewhere below this area right in here. So now, as we kind of break this down and we are going to get into the meat and potatoes of where we're going, again, I'm believing we're going to see price coming down, but we're going to go down zone to zone. Okay. That was 84 that we mark at the bottom of the zone. And so what I like to do is create my levels. Okay. Create my levels. For that, I like to go here. I like to change it over to the line chart. I like to grab my horizontal, and then I like to look for the levels. Now, I'm real big on about every 50 cents because if you look at crude oil, okay, and we go up here to 83.50 right here, and we go across, that's a pretty tight one. So as we go down to 8,300, right, we can just see right here, right? That was an area of support. I'm sorry, resistance right there. Area of resistance right there. So I always tend to do every 50 cents because I think when you look at it, for example, right here, right, again, here are those common areas, area of resistance, area of resistance. area of resistance. So that's why I like kind of staying within the 50%, because again, you can kind of see that as we move forward. Here, 84.51. Look at that again. Got that right here. Let's go 84.50 again. So I really like those 50-cent intervals, and I'm going to go ahead and do one more to the bottom. That was 82, and let's drop down to 82. Okay, I like those even numbers, especially for crude oil, and I'll show you why if you haven't seen any of my previous videos. So we are kind of here right now, right? Kind of shows us that area of support and resistance that we've been talking about. So now when we go back to our candle chart, we can kind of see the way price begins to move in these areas. Okay. And again, our goal in crude oil is always 20 to 30 cents and take some profit. Okay. So if it moves 50 cents, great. But I always want you to protect your trade at 20 to 30 cents. And I think that's so important because so many traders try to hit the home run on every trade, right? Everybody wants 1,000 pips, 1,000 points, 1,000 ticks. If you can learn to consistently grab 20 to 30 cents or ticks, whatever broker you're using, whatever platform you're using, if you can do 20 to 30, especially with crude oil that usually moves at least one full dollar per day, that means 100 clicks or 100 points, then you will be successful. If you can catch 20 a day and you can do that for 30 days, consistent, I can guarantee you, you're going to be in this long term, right? Everyone can hit the home run and have one or two great trades, but are you still trading 7 years later? Are you still trading 10 years later? Are you making enough money to either support yourself, go on vacation? That's the goal of this, right? It's not to be behind a computer or on your phone all day. It's to be able to make some extra income and use it for whatever is important to you. Your goals are different than my goals, and we all have different goals. So whatever those goals are, if you make them reachable, realistic, and attainable, you'll be in this for a long time, right? So don't get misled by all the hype that's out there on all the different platforms and videos. Again, some videos are to entertain, some videos are to teach. My videos are so you can learn, so you can do this to help improve you and your family. So let's kind of jump back in here and let's take a look at where we are right now. So price closed right at this key level of 82. Okay, so this is going to be our gap, meaning this is where price closed on Friday. And so we have to kind of take a look at that. And I'm sorry, I said 82 at 83, right? Now we're going to start dropping down to the smaller time frames, right? Because now we can see here on the 1 hour, we can always grab these lines and adjust our areas of support and resistance. But this was a pretty darn good one. Look at this wick. It bounced off perfect, right? And so we can kind of take a look and say, okay, maybe we got to drop this one a little bit lower because it gets us closer to our areas right here of both support and resistance. Okay. So I think this is a pretty good starting place for Sunday. So the question is going to be, what is going to happen with the gap? We were very successful the last few Sundays with the gap. I always love a huge gap because then that gives us a better opportunity to jump in there. If it's a gap is 5 to 7 points, I don't even go in there and risk it. It's not even worth it. So let's grab a square here and let's assume that on Sunday the gap closes this far down. Right? We open up this far down. Well, now we know that we have, let me grab my arrow here. We have this area of support and this area of support. And eventually what needs to happen is that price needs to come back up to close the gap. So if we gap low anywhere down in here, understand that usually it moves down and then price eventually comes back up to close the gap. Now, keep in mind that your lot size is so important because gaps could stay open for a few minutes, a few hours, even a few days. I've seen it as long as a week and a half. That is a very rare that happens. But again, it does happen every once in a while. That's why I always encourage those of you in my members area, you are tired of hearing me say under leverage. In anything you trade, you're better to under leverage and be wrong than to over leverage and be wrong. Because if you over leverage and you're wrong, you probably are going to risk your account, as it's happened to many, many people. But if you under leverage, then you have plenty of wiggle room, plenty of margin to either get a second position or stay in the game and try to swing that trade back up in your direction. That is so important, whether you are under leveraging or over leveraging. So let's jump back in here now. And that is the case scenario if we gap down. Now, the opposite will happen if we gap up. Maybe they gap up because they see that there's a lot of sellers in the market and they want to try and hit out the stop losses. Well, if that's the case, if we gap up, again, now we know that this area here is an area of resistance. Our next area of resistance would be about that 84.51 mark, but we would have to come back down to close the gap. So the scenarios would work something like we come down here, we move, and then we come back up and we close the gap on the sell gap. And then if it was a buy gap, we would just do the opposite. We open up here, we move up, and then we close that gap, price comes down. Either way, that's kind of how the gaps work. Let me get rid of this. That's kind of how the gaps work when it comes to the Sunday gap opens. So it's going to be important that, again, you don't over leverage and you under leverage when it comes to the gap. So I'm going to go back to the crude oil chart one more time. And then as promised, I am going to give you a bonus trade for the end of this video. And what I want to do is I want to go back to this day chart. Okay, I kind of want to go back to this day chart and I want to go ahead and hide all of this right here. And again, I just kind of wanted to show you when you're looking at the day chart, this here is so important. Okay, this here is so important. We have not been able to close above this 84.73 mark, right? And now we have price action coming down, and then we have this doji candle that was created right here. Okay, so again, based on everything that we're looking at, we should see price come down. It doesn't mean that we're not going, to go up and then come back down. Let me get rid of these. Go back up and then come back down. But again, just based on the price action, right, it looks like we're going to be dropping somewhat with crude oil. We've kind of been in this range. Okay. Now, the one thing I do want to show you is I want to add a moving average to this. And I just want to have a simple moving average. Okay. Added. Close that up. And what I want to do is I want to go ahead and change this setting to 50. You've heard me talk about this in my previous videos. And this is important. And let me go ahead and change this color to yellow. Let's make it a little bit thicker. Okay, cool. Because you do not, and again, let me see if I can grab a brush. I don't have to do it when I edit this, right? You do not want to buy from this position. Look how far away we are from the 50-day moving average. Okay, you do not want to buy here. That is a no-no, right? Buying takes place on something like this when we get closer to our zones and our areas of value, okay, which in this case, it's the 50-day moving average. So please do not buy crude oil up here. You need price to retrace to some of these key levels that we just talked about in the zones before you buy. The closer you are to the 50, the better. You do not want to buy from here. I am not looking for buys on crude oil. I am 100% only looking for sell opportunities in crude oil. So if we go back up to that zone that we talked about at the beginning of the video, I am going to snipe it there back down. I am not looking for buys right now because I don't have enough confirmation that we're going to go past that area of resistance that we talked about. So do not buy here. Let the market get to our areas that we talked about, right? Let the market get to our areas of support and resistance. Because look at the difference. If you drop down to the 4-hour mark, right, these were the buying opportunities near the 50-day moving average, right? Near the 50-day. So on the 4-hour, we can see that we're coming down there, right? We're coming back down. And I'm going to get rid of these lines. We are coming back down to that area, which is a 50-day moving average. So that's what you want to allow, right? You're better off waiting for these scenarios than to buy here and then price just tanks. So again, based on the price action, right, we need to see what's going to happen here. Plenty of evidence that we've come down how many times? 1, 2, 3, 4, 5, 6, 7, 8 times along this 50-day moving average, right, where prices bounced off the 50-day moving average. So we need to see price really to change the tide, okay, that we know we're definitely going to go a much lower. We need price to close below this area, right? Right now, we should be buying the dips until we don't get price to go below 78, 50, we are still what? We are still climbing, right? We are still climbing. Look at the climb. I don't have to show you. If we go down here and we close down here, what do we do at that point? At that point, we have definitely changed the momentum of crude oil, and now we're selling the dips back up. Okay, but up till now, we have no confirmation, right? We are in this pattern right here that we are clearly still climbing. We need to go below this area right here, okay, to change the trajectory. Just like we did here, right? We need this scenario right here. We need this scenario to happen here if we're going to go further down, okay? As of now, we should be bullish on crude oil. But when do you buy? You buy the dips, right? You buy the dips until we know otherwise, right? We can scalp sells because they're going to happen on a smaller time frame. But if you're looking to hold something longer, then you're looking to buy the dips. We scalp buys and sells all day. But I just wanted to kind of leave you with this so you can get understanding where we are on the bigger time frame. Okay. So I hope you have definitely gotten some value in today's long version. My Sundays will always be a longer version of the crude oil because I want to teach and I want to give you perspective. So you can kind of go into the week and you can think of your game plan on which side of the fence you want to be, or if some of you are hedge traders, meaning you trade both buys and sells, you can put yourself in advantageous positions. So now I want to get into my bonus trade for the week. Okay, so my bonus trade for the week is going to be GJ, also known as the pound with the Japanese yen. So let me show you that chart here real quick and what I found when my alerts came off. Now, this initial candle right here, I already scalped it down 20 pips on Friday. Okay, got my alert. It was Thursday or Friday. I'm sorry. We scalped this down. This is a very strong area. This is a very strong area. Again, we don't have any sign that we've closed above. So anything in this box area, I'm looking to sell the pound with the Japanese yen. So I would set your alerts somewhere in this area, okay? And I would look to sell up here. And the reason why I'm telling you that is because if you go over to the day chart, and again, if we look over to our left, we have a nice strong area. And again, has GJ gone higher? Absolutely. It's gone higher back in 2015, right? We have not been this high since late 2015. And those are the highs that this made. So if you go back and look at the historical data, are we going to go back and revisit 2015 prices? Well, we don't know that, but we're going to go off what we see right here. So I like this 4-hour mark right here on GJ for you to be able to scalp your pips. Okay. Again, I think we'll continue to see some resistance somewhere between this 184 to 184.50. So I think it'll be a good opportunity if you are patient to get price in here and scalp 10 to 20 pips at a time because we are reaching highs that we have not seen since 2015. Okay, so I hope you got some value on the crude oil, and I hope this bonus trade allows you to make a little extra money in the market. If you got some value from today's video, definitely you can help me out by hitting the like button. If you're brand new, subscribe. Check out my channel for a while. And if you're newer to trading or you just want some guidance, some mentorship, some trade opportunities, again, with humble people, grateful people, think about joining our Traders Diamond membership. It's the only membership we have for traders on this YouTube channel. It's the Diamond for the price of a cup of coffee a month. I want to make this accessible to everyone, no matter what part of our world you are in, right? For the price of a cup of coffee, come in, join the others that are already there, taking advantage of the daily opportunities that we have inside of this $7 trillion market. Okay, thank you so much for watching. And if you got some value and you want to help someone else out, share this video on your social media, share it in your trading community, because sometimes we need to hear and see a perspective from someone else before somebody has that aha moment and they say, oh, I get it now. So again, sharing is caring. Thanks for watching. Boom.